All right, so my name is Richard Joseph. I'm not a financial advisor, so I read this for educational purposes. So this class, we want to prepare for the bear market. Bear market is once we're 20% below, crashes, beyond that. So let's talk about let's look at the market and let's look at it objectively. So this is the slide, you guys know. And you see that we've been on this downtrend. I've been, talking about this, but look as of lately. So on Friday, we made the bottom where we hit about 434, and I'm sorry, we hit 385, 385, and then from there, you see from Monday and today, we see that the market actually bounced up, but just because we're bouncing doesn't mean that we're going to overcome all this down pressure that we've been subjected to. So in case the market can continue to bounce higher, but just in case we need to prepare for both situations because anything could happen. So let me show some of my lines. So here's what I'll do. I'll show right, and I'll just do these. So you guys see these levels, so here's some levels that I have, right? And I'll show you guys how I got these levels, right? So levels to watch, we crossed the 416 level, and then from there, I'm looking at potentially coming down to the 378 level. After we do whatever we do up here, whether we come up, we bounce, we reject, we come down, I see it's coming down to this level, potentially. And if we were to cross this level, it would be crazy for us to hit this level and below. But these are potential levels. And the way I got these levels is I'm using a tool called you guys might have heard of Fibonacci retracements. So it's a pretty simple tool. So here's what I'm gonna do. I'm gonna erase everything. All right. So this is found on the daily, and all you do is you look at a low to a high. So you have this tool right here, Fibonacci retracement. So you start from the low, and then you want to cover the high. And once you get to the high, it basically draws out different support and resistance levels for you, right? And these levels, so basically you want to use this to figure out, okay, are these viable pullbacks that are going to bounce? Or are they going to continue to go down? So there's certain levels. So the main levels where price likes to bounce off of is this level right here, 38.2 level, 50% level, and 61.8 level. So these are just levels that tend to be respected for bounces, right? So now we're just really watching, and the first level I'm watching is level. So that's basically how I drew my first line. And this is basically exactly what I did. Get a line right here, get a line right here, and pass line was right here. And I'll make a line right here. Just to give me a sense of important levels that if they get crossed, they could really mean certain things. All right, so that's how I got those levels. So then I just draw support and resistance to try to capture the price with support trend lines, support lines. So I'll use array. So instead I do array from down here. And basically I want to just capture a support area where this line would be respected. And I feel like this is a very key area right here, because not only was it support, it also became resistance. So that's why I drew a line right there as a key area, right? So I can also draw a line cover the tops, but right now I'm not even concerned about that. I'm more concerned about where we're at, where we can go. So I'll make another array from here, or even from here, connecting potential resistance, potentially where it's price rejecting on this side. You guys see how I did that? So basically in these two lines, I could try to see the path that the stock is might want to take. You know, it might even like want to follow the bottoms down here. You know what I mean? So now I have a path that I created. You know, and we got to see, you know, where does this price want to go? Does it want to break any one of these lines? You know, and but so that's that. So I want to talk a little bit about some news and then about how we can play the market. So switch gears. All right. Oh, so one more thing. All right. So as you can see today, right? One thing I want you guys to notice, right, is energy. And notice how a lot of times when energy is doing good, the market does bad. Anybody else notice that? So like that's, I mean, this is something that I've been noticing because what happens is that energy is not as heavy as tech and other sectors. So when it does good, it's taking money out of the other sectors, if you will. Does that make sense to you guys? You really catch that?
That makes sense.
All right. So, so all right. So all right. So a couple things happened today, right? So in the morning, so China, right? You know, you guys know about the lockdowns in China, and this morning it definitely raised more concerns, you know, and you know, basically they got to do something about that because they're not spending money and it's affecting the global economy. You know, they're not spending money on gas as much, you know, stuff like that. And then also there was an article about the manufacturing that index that really stumped. So they were expect so it went from 24 and they were expecting it to drop to like 15. It dropped to negative 11 guys. So that was really bad as far as manufacturing. But there's also news of anybody care to read this?
I'll read it. Shanghai to end COVID lockdown and return to normal life in June amid economic slowdown. Authorities say restrictions to.
You hear me? Hold on.
That's the title.
I just realized you guys probably couldn't hear me that well, huh?
You were a little low, yeah.
Yeah, because I realized they were on my headphones. So I was probably just really, really low. But yeah.
I could hear you. We
Yeah.
could, yeah.
Okay, good. So yeah, so basically, all right, so what I wanted to break down, right, is that in the midst of this, in the midst of this volatility, so like if we look at volatility, we look at SPY, we look at the UVXY, we look at the VIX. Let's go to the VIX, right? You'll see that volatility is pretty high. So whenever volatility is high and high is like above 20, options are expensive. When they come back down under 20 and low, that's when options become cheap again. So yeah, you can buy, but as you can see, because the market started coming up a little bit, volatility did start going down in the last couple of days, but it still is considered high, you know? So that's why like right now, if you play options, you're not gonna get as good as a risk to reward as you used to. So the one solution is to play other instruments like stocks that actually don't have implied volatility. So back to this. So the answer is inverse ETFs. So here's a list of like a bunch of inverse ETFs, and I'm sure you guys heard me talk about these before. But what's great about these is that, like for example, SQQQ, you know, it's the inverse of the QQQs, and it's also 3 times leverage. So whatever the QQQs do, which follow the Nasdaq. So if you guys don't know, let me just show you. Right, this is SPY, right? Then you have QQQ, because SPY follows the ES, which those are the futures. QQQ follows NASDAQ, and you see right here, Investico, Trust, QQQ, NASDAQ. And as you can see, QQQ looks like the SPY, right? Only difference is that they had a red day today, but it's same fall, same bounce, So what you're able to do is, you see how this is going down? You could play SQQQ, and it does the opposite. So when the market's going down, this goes up. So instead of playing options, you could buy shares, and I actually bought some shares today of this, and I feel like I should have held it on because I like this entry right here. But I sold my shares, but this is a very good instrument because you can still get the leverage of options of where if the QQQ moves up $1, you make 3. So you make triple whatever the QQQ makes. And when the market's going down, this goes up. So this is a way for you to take advantage of the market going down without having to play options. Any questions? Yeah, what's up, Sid?
What's popping, bro?
Yeah, just talking about ways to beat volatility, because right now, like, volatility so high on the VIX that options, like, you're paying like double what it used to cost to play options. So you have less room to make money. So what you can do to make money is play the inverse ETFs, because SQQ is 3 times leverage. So when QQQ, which is the market, goes down, this goes up, and you make 3 times whatever it makes.
Yep.
So this is a way.
These trades right now, they're gonna go crazy.
Anybody have any questions? Because this is the list right here of like all the inverses, and if you see a minus, that means it's inverse. And
can we get that? I'm sorry. Can I get that list sent over to me?
Yeah, I could send it to you. Matter of fact, I'll just drop it on the coffee. Make it easy. I'll just drop it on coffee as an image.
Okay.
Yeah.
And are you suggesting any? I like the QQQ, SQQQ.
So SQQQ is the most liquid one. It's after SPY, I would suggest SPY is not inverse, but like when it comes to liquidity, after SPY, I feel like SQQQ has the most liquidity. After that, I played SPXU before and SPSX, but but see, if you play the SQQQ, you have to nail your entry. So you have to make sure, because if it goes against you, it's going 3 times against you as well. So that's why today I had a tight stop loss, and what I love about it is, like, I kind of played it like an option where I was out, but it's like, I don't make or lose money nearly as fast. You know what I mean? So as an option, you know what I mean? So it's like, it was really cool playing it, but it does move though. So SQQ is my recommendation. So now let's just say, let's say the market is going up, because we gotta play both ways. We don't know what the market's really, anything's possible right now. So here's the QQQ, right? QQQ is going down. Now, let's say the QQQ starts going up and you want to get leverage on the QQQ. You can play this right here, TQQQ. So TQQQ is a 3 times leverage of QQQ going in the same direction. You understand? So if the market goes up, you could buy TQQQ, get 3 times leverage. Or if the market goes down, you buy SQQQ and you get that 3 times leverage on the downside. So this is your calls and puts without playing calls and puts. Does that answer your question? Anybody have any questions?
This is real nice. Thank you. Should we look at SQQQ?
Yeah, SQQQ. I like SQQQ. You know why I like? Actually, so TQQ is cheaper, right? It's $30 a share, which is why I like it, right? But that's only if the market goes up. But if the market is going down, I like SQQQ. It's a little bit more expensive at 50, but I played like with 10 shares today, So it cost me about $500, but it was like a good test it out today, And then like it went down a little bit, and I lost $5. So it really was nothing. But it's like the way it went down, I knew that cents and options would have been a bigger loss. You know what I mean? So that's pretty interesting. And I definitely plan to play again tomorrow because the thing about these two, I also gotta tell you guys, these are leverage ETFs, so you don't want to hold them more than 3 to 5 days max. Do not hold these. Do not hold these in your portfolio like a regular stock. I gotta say that. So if you play anything leverage, because it's gonna go against you harder once the party's over, it's over. So definitely take it. Like imagine if you played it from like if you were able to play it near the bottoms down here. Say you played this breakout, you got in right here at 35 to even 60. That's 100% in a couple of days, in a couple of weeks. Let's see, April 4th, in like a month. Yeah, just off the stock. That's crazy, because stocks don't usually move like that, but this thing moves like that in both directions. You see what I mean? So you don't want to hold these. You want to hold these no longer than 3 days, I'll say. 5 if you know what you're doing. But do not hold these. Because look, imagine you bought it right here and it came in right here. You just lost 63, 53. You lost, a good, 16, 20%, 16% of your income, of your investment. So you gotta play these. So the main thing is entry. So what I would suggest you guys do for entry, my simple entry is using the 9 and the 8. Using 9 MA and the 8 MA. And you want to buy near these moving averages and near across. You see how it crosses right here? So those are your what you want to basically you want the white. So the white, so you want the slower one, so the 9 is the slower one, right? And the 8 is the faster one because it's a shorter time period. So you want the faster one to cross the slower one. And that's all that's the ultimate entry. But besides that, if you get it to stay above both of them and to cross and to hold above, so this is a good entry as well. You guys see what I'm saying? Why is this a good entry? Because I can put my stop loss right here. If anything goes wrong, I have a very small area that I can define my risk, And it's like, yeah, $3 on depending on how many shares I buy, If I buy 10 shares, $3, that's $30 loss. You know what I mean? If I buy 100 shares, that's $300 loss. But it basically, you have a defined risk area, and this is the best way to play it. You know what I mean? Because at the end of the day, this is a healthy pullback. And like, for example, I can use what I showed you guys, the Fibonacci's, start from the bottom to the top of the move, and look where it's bouncing at the 50% level. You see what I'm saying? So using Fibonacci, the common area to bounce is 50%, 61%, or 38%. And these are the viable pullbacks. And the fact that it's above the moving averages, I'm definitely buying this tomorrow. We'll see where it opens up at, and I like it.
Yeah, it's crazy. I was using the fibs like crazy today, bro. Those things work.
Yeah, they do. And like the reason why all this works is because we believe it. We believe it works, and all of us together believe it, and we make it work.
Yep.
But it's like if I wanted to buy the option right now, it would have been really expensive. Like let's just see how expensive it would be right now. If I wanted to buy the option. And so my advice too is like if you play options, set limit orders where you don't pay full price. You don't pay whatever the market is asking you for. You let it get beat up, and then you look at your charts, and then you could buy it. But you got to be careful buying options. I'd say keep everything small right now. I lost a lot of money just playing options lately. Hang on, let me share my screen real quick.
Yo, I see the VIX on Bloomberg is going crazy low.
Yeah, it's starting because the VIX is the opposite of what the market does.
Yeah.
So the market started going up these past 2 days. So the VIX started going down. Let me share my screen. Oh, am I still sharing my screen? I'm sharing
Yeah.
a different. You guys can still see this right now?
Yeah.
All right, cool. Yeah, so yeah, I'm down a lot right now on EWZ, just messing around. But but I was saying, the other shares I've been buying is wheat. Wheat has been doing really good. So basically, you can also buy shares of stuff that have nothing to do with their market, like commodities that are going up, like wheat and corn. There's also ways you can play this time. But let's just say if I want to buy SQQQ, all right, and let's just say I want to buy a weekly, just a weekly, expiring this week.
We see your trading view.
Oh, my fault.
All good.
All right, yeah. So now you have to see my screen. So yeah, let's say I wanted to buy a weekly option on SQQQ. Look at the money right now. It's $291. No, I'm not doing it. And look at the volatility. It's 132%. It's really high volatility, and I can even go to the charts, right? And say I look at just SQQQ itself. I look at just this, without the overlap, whatever. I'll be doing the overlaps, comparing it to other stuff. But look at this, the volatility. So right now the volatility is slightly under. It's slightly under right now. Okay, but that's probably just because today. But like basically what I'm saying, basically the implied volatility was higher than the historical, but I see they're both high. So it's not as bad as I wanted it to be. But yeah, it's just a lot more money to play an option, and even for going further out the money, it's like I have to go really far out the money to get cheap options. Meanwhile, it's like at the end of the day, it's like you gotta play to your budget, because meanwhile you can play something like Rig, which is very, very cheap and moves a lot. You know what I mean? So like if I go to the chart and I type in Rig, right? Look at how cheap this is. Let me take some of this stuff out. I'll take out this real quick. All right, so yeah, look at this. So this stock went from 325 to 550, almost doubling. And you gotta understand, this only took like 1, 2, 3, 4, 5, 6, 7 days. So playing something like this is so much cheaper, right? And your buck will go so much further, because basically options are basically in line with the market cap and the pricing of the stock. So now if we go to Rig option, look at them. Look at that, the money. Look at that, the money calls. You guys see that? You guys see the price difference? So I could buy in the money, and I can actually not pay that much and get a safer investment. Any questions? Now you guys are clear? All right. And so if you guys want this recording, it'll be on my Coffee page. Let me drop that link for you, those of y'all that don't got it. Copy. I dropped it in the chat. There you go. But yeah, so I was talking about Thinkorswim. Yeah, the inverse ETFs. So yeah, let's look at some. Another one I like to play. SDS. It's a 2 times leverage. It's a little bit cheaper, but it's still somewhat, you can get out the money. Not too bad.
Witchell, can I ask you a question?
Mm-hmm.
So how do you feel about buying stock on Chinese companies? So for instance, in the medical field, computerized technology, CT, uses contrast. There is a shortage of contrast because the majority of the suppliers, I don't know if you did, I know you did sales, I don't know if you did pharmaceuticals, but there's a shortage of contrast here in the United States because majority of it is made in China. And of course, China is on lockdown. It's called contrast. It's what they use for CT.
Oh,
And
is
they'll
it
use for some
stocks?
X-rays. Yeah, well, no. So I was trying to find companies. So
Stocks.
GE so GE gets it from China, but I was trying to find an actual manufacturer in China. So I'm thinking, okay, wow, maybe this might be a good play to buy these stocks. But when I looked up some, it was like so low, like $1.80 or $2. So I don't know if it's good.
Yeah, I wouldn't like this is the FX side. This is like something I've been shorting and buying puts on, and just like this represents the mid cap, large cap actually. So this is all your Alibabas, your DDs, your Neos. So this is like representation of the Chinese large caps.
Okay.
So it's not really and they're in lockdown right now, so nothing's moving. Maybe in the future, once everything starts moving, once they start getting off lockdown,
All right, cool.
Yeah, what's the other one? Yeah, but I like looking at different countries. So like EWZ, that's the one, that's the Brazilian one, but it's been coming up. I thought it was going down.
But
EWZ.
excuse me, sir, but if they're on lockdown and nothing's moving, would it be a good idea to purchase what Dorney was saying at a lower price and just sitting on it?
If you have money to tie down and willing to risk it falling further, yes. You know what I mean? If you're willing, because you're taking the risk of just surviving this turbulent time, why even take the risk until you could see
you see movement going back to the upward side?
Exactly, it's
to the
safer.
upside.
Yeah, because otherwise you're just sitting you're either catching a falling knife or you're just sitting on it.
Right. Okay.
Yeah.
Makes sense.
But yeah, if you have the money and you put have a certain amount that you're willing to just buy the dip and sit on it, then by all means. But another one, EWJ, is Japan, and you notice they do a lot of the same letters, like EW and then a letter. But look at Japan. Japan has crashed. Like, cause like from all-time high, they were at 74. Now they're at 56. That's a good 7.4 is 10. They're more than 20% down. Yeah, they're more than 20% down. So yeah, they're officially in crash territory. So this, they look like their options are cheap right now. So puts on this might be good too. Let me look at it actually. Oh, but commodities, yeah, because I bought some wheat today, and wheat is really what I'm betting on. And even today, like, look, I bought this wheat today, but I paid extra. But I have it till October, so I'll sell it. But I have 104 shares of wheat. So another thing you can do more advanced is I can sell options on my stock. So like I could like go into wheat and I could like, so like let's say I wanted to sell this put right here, or what I want to sell this put right here, 12. Basically, I want to maybe, yeah. So for example, if I wanted to sell this put right here, I could sell this, right? Go to sell, and then sell. I think I have to do one contract because so for every 100 shares of wheat, I could sell this, and then I will get $25. So that's something I can do every week based off the stocks that I own. But the risk is that because basically I'm taking the other side of the person's bet that is going to be under 12. So if it finishes above 12, I get to keep $25. But yeah, I like wheat. If you look at wheat, I really, really like wheat in the commodities right now. Yeah, so let's look at wheat. Look at wheat today, guys. Definitely broke out today. The futures are looking up like how they were before. And as you can see, wheat has been in this consolidation for so long that it's finally gaining some volume and actually breaking out. So that's wheat.
So, I'm in the car on my way to work, so I can halfway see. Did you buy the wheat as an option or a stock?
Both.
You
That's
did
how much I
both.
believe in it. That's how much I believe in it. It's made me money before. I caught this. You see this initial breakup. Yeah, that's where I got involved from the $9 area in wheat, and like just from buying, I think about like 4 contracts, put in about how much is it, like $40 a contract. So I put in like 160, and then I made $600 in profit off this, especially getting out somewhere around there.
Oh, look at God. All right now.
Yeah. And I remember that day I posted it. I was like, guys, I made bread today, or should I say wheat? So, but the whole thing about this play and why I believe in this play is because Russia makes 40% of the world's wheat, Russia and Ukraine. So is anybody planting wheat right now? I don't think so.
Nope.
So what do you think is gonna happen by next year?
Gonna be sky high.
Yeah.
Well, I'm already in it.
It's gonna be sky high.
And again, especially if Russia is trying to take over Ukraine and they're a major wheat supplier, then you already know what's going to happen.
Because right now the ships can't even leave the dock to go deliver the wheat. So wheat is a big one, and not only wheat.
So is that why it's on the uptrend? Because
it's been building for a while. Yeah, because of the war. Because now if you own a restaurant, you're paying more for a pound of wheat than you did before.
Correct. And wheat I don't believe that it has an expiration date on it. I don't know.
What you mean, like the grains? I don't know.
Yeah, I don't think it has like a eat by date on it.
Yeah, only when you turn it to bread, right?
Yeah, or buy date by it on it.
But it's not just wheat. Look at corn. Another one. It's very easy to know. It's called corn. Another one. Corn. It's not just another one. Fertilizer. It's like these are all plays that have nothing to do with the market, and this is why you can beat the market's volatility by playing some of these plays.
But corn is something that's just not on a cob. I mean, corn could be used for a whole lot of things.
Yeah, you're right.
Yeah, and Track, he likes Scott's fertilizer. So when you think about Scott fertilizer, you think about fertilizing your grass. He said, but the cannabis companies have to use Scott fertilizer to grow the cannabis. So why not invest in Scott fertilizer?
That makes sense. On a mute point, we don't want fertilizer. Fertilizer was known to blow up the building in Oklahoma too. I mean, we're not looking at it for that particular thing, but it was Scotch fertilizer that did that.
I'm trying to remember what the ticker of the fertilizer company I seen was again. But another one, Coal, ARLP. I played this before. This is Coal. And then the other one I played before was Uranium, UEC. But it's actually been going down. Uranium. I played it to the upside, but it's actually been going down as of lately. But at the end of the day, these are commodities. The other one, AA. I remember I showed you guys this one. This one has been going down a lot, but the days where it was going up, it goes up tremendously. And I was able to make about $400 on this day right here, where you see this long wick right here.
But
Just that big.
what's that? Alcoa?
Alcoa. Mm-hmm.
That's
Materials.
they make the can. They make cans.
Aluminum.
Aluminum, right?
Mhm.
Aluminum. The
Yeah.
foil and cans and
And you
yeah.
see, look from the beginning of 2020, you see they were at $5 a share. They reached almost 100.
Dang.
Yeah, in like 2 years. And even in the beginning of 2021, they were still at a low of $17 a share, from 17 to 100 in a year. That's ridiculous. Looks like crypto.
Bro, did you mark that up before?
Yeah, I've been watching this for a minute.
Did you get into that?
Yeah, I made $400 on this day right here.
Jeez.
Like this wick. Yeah, just off this wick.
So looking at the
On this
commodities is
Mhm.
something to look at too.
Yeah, absolutely. Commodities and oil. Oil is another one.
Yo,
BNO.
oil is crazy right now.
It's BNO. BNO is United States Brent oil fund. Brent is the oil that they use in Europe more so. But look at this perfect ascending triangle right here. I like this a lot. Look at the volume. Wow.
Look at this. What's that at 19? What was it? Right here at this first green candle.
Right here.
Right. It's at 1890.
Yeah.
So if you took it all the way up to 32,
you would double on the stock.
That was alone. Almost a double.
Just on the stock alone. That's crazy. That's crazy. The oil is ripping. I might have to look into Brent tomorrow as well. But it's just the fact that it's making this perfect.
Hold up, look. Can you look up crude oil real quick?
Yeah, WTI, I think it's crude. This is Brent crude. But the crude oil futures is slash BZ. Is it BZ? Future. Hold on.
Just type in crude. Pop up.
All right.
Right there.